steel sector, or continued bad news coming in for the steel sector. Tata Steel's European subsidiary has announced the largest ever job cut in a bid to cut costs. Kritika joins us with the details. Kritika, Tata Steel's UK subsidiary back in the news, and they are now going to be going in for a significant headcount reduction.
Absolutely, and this is a part of a massive cost-cutting initiative undertaken, and it was much needed to break this job cut of 1,050. It's 750 in Port Talbot in their plant in Port Talbot, 200 in basic support functions, and 100 in their steel mills across 3 geography. Now, the reason, of course, it's severely high European steel prices, flood of cheap imports, particularly from China, of course, and these market conditions are expected to continue for the next foreseeable future. That is at least 1 or 2 years. Add to that the fact that it's been high tax rates as far as the steel industry is concerned, and anti-dumping cases have increased, hitting the Tata Steel numbers. So what's the way forward? They will undergo continued discussions and consultation with employee unions to understand how much more they can cut costs aside from cutting out jobs. But yes, as far as the overall balance sheet is concerned, you know, when there's bad news for employees, it's good news for the balance sheet. In the next 2 quarters, we could see some relief coming in for Tata Steel's margins and profits from the European geography, and some respite could be in store in the immediate term for the stock, which has been falling over the last 1 or 2 weeks severely.
All right, Kritika, thanks very much for joining us.